So we'll continue with our provisions on auditors. The last part that is pending is penalties. Okay. So penalties will be applicable for both company as well as auditors. Okay. If any provisions contained in section 139 to 146 is contravened, the company shall be punishable with a fine not less than 25,000 but which might extend up to 5 lakhs. Further, every officer in default shall be punishable with a fine not less than 10,000 but which might extend up to 1 lakh. Okay. This is a regular penalty. You may go through it once for the purpose of examinations, but the auditor penalty is important from the exam perspective. Because an outsider is getting penalized under Companies Act, they may ask a straightforward question: what is the penal provisions, or what are all the penal penalty amount that the auditor may have to pay, or that the auditor may have to bear? If an audit firm or an auditor of the company contravenes with any provisions of this chapter, that is 39, 143, 144, 145, etc., the auditor, that is the individual or the firm, shall be punishable with a fine not less than 25,000 rupees, but which might extend up to 5 lakh rupees or 4 times the remuneration of the auditor, whichever is lower. So the lower limit is 25,000, upper limit is 5 lakhs or 4 times the remuneration payable, whichever is lower. Any doubts here? And this is only with respect to non-compliance of the act, not fraudulent intention. If the auditor also has a fraudulent intention, that is to defraud the creditors or the members of the company, then the auditor shall be punishable with an imprisonment up to 1 year and with a fine which shall not be less than 50,000 rupees, but which might extend up to 25 lakh rupees or 8 times the auditor's remuneration, whichever is lower. So, please remember this provisions. If an auditor has given an audit report with an intention to deceive the company or its shareholders or its creditors or any tax authorities, then the auditor shall be penalized to the tune of 25 or 50,000 rupees minimum, and which might extend up to 25 lakhs or 8 times the audit remuneration, whichever is lower. Any doubts here? And if the auditor is convicted under this provision, that is fraudulent nature, whatever the fee that the auditor has received from the company shall be returned back, and also pay damages to the company because of its fraudulent report. Damages is something which you will be reading more in law of torts, liquidated, unliquidated damages, etc. So the courts will determine the damage, and the auditor shall be liable to refund the money along with damages. Any doubts here? And joint civil and criminal liability of the audit firm and the partner. In case of audit of a company by an audit firm, if it is proved that the partners of the audit firm have or has acted in a fraudulent manner in relation to or by the companies, or colluded with any fraud, colluded with the directors of the company or the company's other officers, the liability arising out of that fraudulent action, either civil or criminal, shall be of the partner or the partners concerned of the audit firm and the firm jointly. So, in case any civil actions are taken against the company or criminal actions are taken against the company, the partner who signed the audit report, the other partners who are part of this audit, and the audit firm, everyone will be jointly liable for both civil as well as criminal liability prosecution. In case of criminal liability, the concerned partner or the partners who acted in a fraudulent manner alone shall be liable. For civil liability, the entire firm and the other partners will also be liable. But for criminal liability, you cannot randomly call every partner and then put them in the jail. Suppose A, B, and C are partners in a firm called A and Co. A issued a fraudulent audit report. A, B, and C and the firm ABC and Co. or A and Co. is liable to pay damages. But the person who will be going to jail or imprisoned shall only be A, not B and C. Any doubts? And the class action suit against the auditors of the company is possible as per Companies Act 2013 under section 245. Basically, class action suit means I am a member. Based on the audit report, I believe that the company is going well, and I have invested some money into it. And now, if I'm going to face some damages, I will have to initiate a suit against the company as well as the auditor. But in class action suit, instead of each and every individual raising a suit, a group of people come together and then file one single suit against the company as well as the auditor. Against the company, it is very much possible. Against the auditor, this section also enables and allows the group of people to sue against the auditors. Any doubts? So these are all the brief with respect to penalties which the auditor may face. From the auditor's perspective, what are all the penalties? Just make a note of that alone. That is very important from the company. From the exam's point of view, they may directly ask a question to explain what is the penalty that the auditor has to pay. Any doubts? So with this, we come to an end of the statutory audit portion. We have two other audits under Companies Act. One is cost audit and another one is secretarial audit. To give a brief about cost audit is not applicable for all companies, unlike statutory audit. Statutory audit is applicable for all companies. You will have to appoint a practicing chartered accountant in practice for statutory audit. Here, in case of cost audit, it is applicable depending upon the threshold limit. Okay. The Companies Act has classified the different products and services which a company may be into as two different types. One, a regulated sector, and another one is a non-regulated sector. This classification is important because based on this classification only, the threshold applicability will be checked upon, because a regulated sector will have a different threshold limit and a non-regulated sector will have a different threshold limit. For example, manufacturing of automobiles, it comes under regulated sector. Let's take another let's say not exactly sure of the non-regulated sector. Let's take another example. Let's say manufacturing of valves or pipes, PVC pipes. That may be under unregulated sector. Depending upon this classification, the company will check its threshold limit and then see whether cost audit is applicable. Okay. So before we go, they have one blanket exemption. If you are an MSME registered, micro and small industries are alone exempted from maintenance of cost records and cost audits. Not the medium enterprise, micro and small enterprises. You must be MSME registered and you should be classified as micro or small. Any doubts? Now we'll go into the applicability of the cost audit and cost records. So, in a statutory audit, we audit the financial statements. In cost audit, we audit the cost records. So, for that, first and foremost thing, the company should maintain something called as cost records, correct? So, before we went to the statutory audit chapter, we saw the companies, its requirement to maintain financial statements, standards prescribed under Companies Act, and how do they have to maintain, etc., etc. Here also, Companies Act brings up with a provision and then says there are certain companies which are required to maintain cost records. What are those? All class of companies, including foreign companies. If a foreign company is manufacturing in India, even that is required to maintain cost records. Okay. And it is engaged in production of goods or provision of services specified in the regulated or non-regulated sector, and having a turnover of 35 crores or more in the immediate preceding financial year. Any doubts? So if a company which is producing one or more of the goods or services mentioned in the regulated and unregulated sectors, there are certain types of goods and services which never fall into regulated or unregulated, which means those companies are not even required to maintain cost records. For example, financial companies, NBFCs, banks, these will not fall under both regulated as well as non-regulated sector. Does that mean that the company or the government has forgot to include them? No. For them, no matter what happens, cost records are not even applicable because they're not falling under regulated as well as non-regulated sector. Okay. You can classify those set of sectors as probably exempted sectors. Okay. So, but here what we'll have to check is that if any one of the goods or services mentioned in the regulated or non-regulated sector is being produced by the company and its aggregate turnover in the preceding financial year is 35 crores or more, then it is required to maintain cost records. Cost records shall be in form CRA1, and for the purpose of computing this 35 crores, the turnover from the activities mentioned in the regulated and non-regulated alone will not be considered. Entire company as a whole should be taken into consideration. Suppose I am into banking sector. At the same time, I am also into manufacturing of automobile parts. Automobile parts comes under regulated sector. Banking is not mentioned both in unregulated or non-regulated and regulated sector. But for the purpose of this 35 crores, I will also include my banking turnover. That is what is mentioned in the turnover specified is the turnover of the company as a whole and not from the products or services covered under cost rules. Thus, if a company has a turnover more than 35 crores and produces one or more of the goods and services mentioned in the regulated or the unregulated sector, irrespective of its individual turnover, total turnover 35 crores cross mandatory cost records needs to be maintained. For example, if my banking turnover is 33 crores, manufacturing turnover is just 4 crores, total comes to 37 crores, 33 plus 4, 37 crores. Am I required to maintain cost records? Yes, mandatorily. Though my regulated or my unregulated sectors turnover contributes only to 4 crores, total turnover touches 35 crores. So I will have to maintain cost records and that shall be in form CRA1. Any doubts? So now law has said what are all the companies that are required to maintain cost records. Now we see those companies which are required to submit cost audit report. In case of regulated sectors, company is having an overall turnover of 50 crores or more in the immediate preceding financial year and turnover of rupees 25 crores from individual products or services specified in the regulated sector are required to submit audit report from the financial year 2014-15. So basically, two conditions to be satisfied. Turnover should be more than 50 crores and the individual products which is mentioned in the regulated sector, products or services that are mentioned in the regulated sector shall be contributing to at least 25 crores turnover. Then in that case, audit report is mandatory. And in case of unregulated sector, companies having an overall turnover of 100 crores and 35 crores from individual products or services specified in the rules. Basically, in unregulated sector, just the threshold alone will vary, conditions are same. So the total turnover shall not be less than 100 crores and the individual products or services that are mentioned in the non-regulated sector shall contribute at least to 35 crores. If that is there, then cost audit report is mandatory. So for the purpose of audit, law divides into regulated and unregulated. Based on that, you will apply the provisions. Any doubts? And even if it falls under these categories, there are certain exemptions to audit. Just like how cost records are exempted for every micro and small industries, audit is also exempted for certain set of companies. Companies whose revenue from exports exceeds 75% of the total revenue. If the company is exporting more than 75% of its total turnover, then company law says you don't have to submit the audit report, cost audit report. Or the company is operating in SEC, or the company is a captive electricity generating plant. So in all these cases, cost records will be applicable. Only the audit provisions are exempt. So please make a note of it. In examination, they will specifically give you a company is operating from SEC. It is coming under regulated sector. Does it have to maintain cost records, etc.? People will get confused between exemption for cost records and exemption for cost audit. Exemption for cost records is given only to micro and small industries, not to anyone else. Cost audit alone is exempted for these three set of companies. Companies whose export turnover equals 75% of the total exports, companies operating from SECs, captive electricity generation plants. Any doubts? The cost audit report shall be in form CRA2. Sorry, CRA3. Any doubts? The cost audit report shall be in form CRA3. And just like how before appointing a statutory auditor, we are required to get a consent, eligibility certificate under CA and Companies Act, and other conditions that are prescribed under section 141 are required to be completed. Here also all the three conditions are required to be completed. Cost and Works Accountant Act and the Companies Act needs to be completed. Section 141, which means the independence criteria set down for statutory auditor is also applicable for a cost auditor. A cost auditor cannot be related to the company. Just like how we will have to see for cost auditor, statutory auditors, cost auditors will also be applicable with the same provisions. And the proposed appointment is within the limits laid down under the Act. Same list of proceedings, etc. All these things needs to be obtained from the cost auditor before appointing him. Manner of appointment, board shall appoint him, but the remuneration fixed by the board of directors shall be ratified by the members at the general meeting. Okay. Shall within 180 days from the commencement of every financial year, the board of directors shall appoint the cost auditor and his remuneration shall be ratified by the members. Which means board can choose to give any remuneration they want, but the members should also approve on it. but the members do not have any right to decide on what or who is the cost auditor of the company. Okay. Any doubts? Because appointment provisions fully are vested with the board of directors and not the members. Only the negotiation of the remuneration lies with the members. And once a cost auditor is appointed, the company shall file form CRA2 to the central government for the purpose of intimating the appointment of the cost auditor. Just like how we file ADT1 to the central government within 15 days from the date of appointment of the statutory auditor, here we will have to file CRA2 within 180 days from the commencement of the financial year. This is not 15 days from the date of appointment, 30 days from the date of appointment. No, law does not say within what time or how many days from the date of appointment. Law blanketa says 180 days from the end of the financial year. File CRA2. That's all. Nothing else. So before that appointment should happen, before that CRA2 should be filed. CRA appointment can happen in April also, CRA2 can be filed in September also, not a problem. But law just wants the company that it should file CRA2 within 180 days from the commencement of the financial year. Any doubts? And every cost auditor appointed shall continue as the cost auditor for a period of 180 days from the closure of the financial year or till he submits the cost audit report for the financial year for which he audits. So basically 180 days is the maximum time limit that he can be the auditor of the company after the close of the financial year. For example, he is appointed to audit the cost records for 23-24. He can be the cost auditor up to a maximum of 39-24 or up to a maximum of 180 days, that is 30th September 2024, or the date on which he submits his cost audit report. Any doubts? And whatever cost audit report submitted by him shall be filed with the central government within 30 days from the receipt of the copy of the cost audit report in form CRA4. Any doubts? C is the audit report. Audit report format is CRA3. The form in which that will be filed shall be CRA4. CRA3 is a physical form. He will have to fill the report in that format. And if at all a company has gone in for extension of annual general meeting, that extended period can be considered for the purpose of filing CRA4. Any doubts? Please make a note of this. CRA1 is the cost records format, the manner in which the cost records needs to be maintained. CRA2 is intimation of appointment of cost auditor to the central government. CRA3 is the audit report format. CRA1 and 3 are physical forms. They don't have to be submitted to the central government. That is something the company and the auditor has to give. CRA4 is submission of the audit report to the central government. The next one, what we'll be seeing is the sectoral audit. First and foremost thing, sectoral audit will be applicable for every listed companies, public companies having a paid up share capital of 50 crores or more, public companies having a turnover of 250 crores or more, or every other companies having borrowings from banks and public financial institutions of 100 crores or more. So listed, mandatory. In case of public, two conditions: paid up share capital based conditions 50 crores or more, turnover based conditions 250 crores or more, and any other category, which is basically it can be public or private, if its borrowings from banks and financial institutions are 100 crores or more. And the secretarial audit report shall be in form MR3. The physical form which a practicing company secretary has to certify and then give it. Okay. The role of secretarial audit is to ensure compliance under all the applicable laws that are applicable for the company are properly complied with. First and foremost, Companies Act, SEBI, FEMA, and other relevant labor laws, and maybe even income tax laws, depository participant laws, that is basically Depositories Act and the relevant regulations, etc. All these things needs to be checked, and this report shall be given by a practicing company secretary. Any doubts? The last form of audit is an internal audit. To some extent, this can also be called as a management audit. The role of internal audit here is that the board of directors, let's say, will be sitting somewhere on the top taking management oriented decisions. They will say certain activities to be carried out. So we don't know whether the activities are properly carried out or not. So this is a report to the management and the board of directors stating that whether the rules and regulations set by the management are properly adhered to. First and foremost. Second, whether the rules and regulations set by the management or the board of directors are the correct rules. What if there is a loophole in the rules? Okay, so these things are checked by an internal auditor, and then he will give a report to the internal auditor. There is no frequency for the report. There is no format for this internal audit report. It can be on monthly basis. It can be on yearly basis. It can be on 6 months basis. The only thing is the company should have someone called as an internal auditor. That's all. So what are all those companies that are required to have internal auditors? Every listed companies. In case of unlisted public companies, companies having a paid up share capital of 50 crores or more, turnover of 200 crores or more, outstanding loans from banks or public financial institutions of 100 crores or more, or outstanding deposits of 25 crores or more. Maybe you can remember it as 25, 50, 100, 200. Okay. 25 is for deposits, 50 is for paid up share capital, 100 is for outstanding loans, 200 is for turnover. So 25 into 200, sorry, 25 into 250, 50 into 200, 100 into 200. If you remember 25, you can just multiply it by 2 for 3 times and then get the answers for other 3 categories. And in case of private companies, turnover criteria and the outstanding loans and borrowings criteria alone will be applicable. That is 200 crores or 100 crores of borrowings. Any doubts? If any of these criteria are met by the companies, they will have to appoint someone called as an internal auditor. Okay. The internal auditor can be a chartered accountant, cost accountant, or such other person as may be decided by the board. Because the role is very simple: whether the directions of the management are carried out properly, or whether the directions are the right directions. whether the right set of rules and regulations are properly covered with. And he can also be an employee of the company. There is no doubt on it. Any doubts with respect to this chapter? We may again touch upon sectoral audit when we do the K&B chapter alone, but basic crux is only this much. Any doubts? Okay, with this we are done with the audit chapter. Accounts and audit is fully done, and we'll take a 5-minute break and then start with board of directors.